Okay, I'd like to welcome you to the Hurley Investments Financial Services Commentary for August 28th, 2018. This is Kevin Hurley today, and I'm going to start a little backwards. I'm going to start a little backwards in regards to, I want to tell you a story on how being a registered investment advisor sucks. I know you're going, where is he going at with this? But let me start off with an interesting story that I read about how one CEO taught his employees a lesson in integrity. A successful businessman is growing old, and the CEO came to the employees and basically said, "Hey, I'm going to give each of you a seed, and with that seed, I'm going to come back 1 year from today. I'm going to look at the plants that you guys bring in, how well you took care of it, and I will choose the next CEO." So this older man, Jim, received his seed like everyone else. He went home excited. He got a pot, soil, compost. He planted the seed. Every day he watered it. And, of course, nothing grew. I've been there before, right? 3, 4, 5 weeks went by and nothing grew. Now, at work, others were talking about, hey, my plant's starting to grow. My plant's taking off. In fact, 6 months into it, Jim still had this seed. Nothing grew. And people were talking about how great these trees were and these plants were and these bushes were. And Jim's just like, oh my gosh, this is just not going to work. He wanted so bad for that seed to grow. And eventually the year went by, and here came this meeting. And Jim looked at his wife and says, he's not going. He blew it. And his wife said, you need to be honest. You need to sit there and through the embarrassing moments of life, you need to be willing to say you gave it your best. So as he went in, there were some beautiful plants and flowers in all shapes and sizes, and there was Jim with his empty pot. When the CEO arrived, he surveyed the room, greeted his young executives, noticed, hey, what great plants, trees, and flowers you've grown to the CEO. And all of a sudden, the CEO spotted Jim in the back of the room. He ordered the financial director to bring him to the front. Jim was terrified. And he thought, my goodness, I blew it. Terrified. Hopefully I could spell it right? Still not. And he thought, obviously, if he knows I'm a failure, maybe he will have me read or fired, right? When Jim got to the front, the CEO asked him what happened to his seed, and Jim told him the story. I planted it, I watered, I did everything I could for it. And the CEO asked everyone to sit down except for Jim. He looked at Jim and asked the young executives, behold your next chief executive officer. His name is Jim. No one could believe it. They're like, what the heck? What's going on? The CEO said 1 year ago, I gave everyone in this room a seed. I told you to take the seed, plant it, water it, and bring it back to me today. But I gave you all boiled seeds. They were dead. It was not possible for them to grow. All of you except for Jim have brought me trees and plants and flowers. When you found the seed would not grow, you substituted another seed for the one I gave you. Jim was the only one with the courage, honesty to bring me a pot with my seed in it. Therefore, he is the one who will be the new chief executive officer. There are times doing what we do is difficult. There are times that, plain and simple, being a financial advisor, doing my own thing, not playing the story of what everyone else does, not just throwing it, as Warren Buffett said, putting in a mutual fund when you don't know how to invest, throwing everything to the wall, seeing what sticks. There are times when we do what we do, it gets tough. And it gets tough because of clients. It doesn't get tough because of the system. It gets really tough because of clients. If I was to ask everyone here today, what's the most important part of investing to be successful, what would you tell me? You guys, most important part of being successful? So let me put it this way. What is the most important part of being successful in the market? How about if I turn it that way? All right. So it's kind of funny. Two came in really, really quick. First, being honest with oneself. I would definitely agree with that one. Great answer, Abraham. Lance says exiting trades profitably. And in all honesty, Lance, that is also a very good one, because if you keep exiting trades profitably, you're successful. But sometimes that leaves you with a bunch of trades that never get closed because you're extremely down, or you're down a lot in it. The correct answer is patience. In my 24 years following the market, in my 2004, so 14 years of actually trading in the market, it's patience. Patience is what makes you successful in the market. Being honest with oneself is a good one, and trades profitably is a good one. Mary, I like this one as well. Sticking to a proven system. I'm assuming that's a trading system. All three of those are great, and they're parts of it. But it's that patience. Patience in letting the trade work. Patience in knowing what you do will work when it matters most. In fact, if I can ask this question, and Bill, if you're there, I'd love to hear you answer. And who was my other one? Mary, I think it was you. Mary, if you wouldn't mind letting me know what this answer is. If I was to ask you, what is the primary goal of Hurley Investments? What would you tell me? If I was going to ask you, what is the primary goal of Hurley Investments? What would you two tell me? Do well for clients. Okay. Mary, thank you, Bill. And obviously that is the primary goal. Make money as never before. That's kind of funny. That's also true. Mary, are you going to answer? Lance says capture portions of the wave, whether up or down. That is very insightful. And Mary, I'm sorry if I'm putting you on the spot here. Don't kill the complaining clients. Oh, but Bill, that's half the fun. That's the reason why I named, when you see different sections that I put money that I have under management, mine's called the no parkers. No parkers. Frustrating. Not understanding, not getting it. Teaching the same thing over and over and over again. The no parkers is so I don't kill complaining clients. Mary, give it a shot. I'm not holding anything against you. And you're not allowed to type in a question mark. I want a real answer. Dun, 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 dun. 5 more seconds, Mary. Not losing all their money. And I'm going to say yes. Is it a total loss? Is that car a total loss? You bet. Definitely. Yeah. That's what happens when my high schooler, who's only been driving for 2 months, makes a left-hand turn in front of a car and fails to yield. What's amazing, and you can't really tell, but on that left-hand corner, right over here, is where the driver's side point or front of her car hit, and her car spun around, so the passenger side is what hit the front of his car. It was a horrific accident. Kudos to my kid. He was able to get out as she was screaming. He was able to walk over to her. Hey, are you okay? Can you move your arms? Can you move your toes? Can you wiggle? Are you able to move? Okay, if you're able to move, I smell smoke. Do you smell smoke? Yes, you do. Let me get you out of your car. Let's try the window. If the window doesn't work, I'm going to break it. Let me get you out of your car. Got her out of the car, got her over to the side. Really, what a stud to take care of her, not even knowing if it was his fault or not. He was a man among men as a 17-year-old boy. First to react as others saw it, first to talk her down and calm her down, first to carry her out, first to get everyone and her away from the cars. I've never been so proud of my boy. It wasn't until we got there and, mom came and gave him a hug and said, "You're okay." He just crashed, just cried like there was no tomorrow. I'm kind of getting weird, teary-eyed thinking about it. Then he let it all out. Then he was like, "I'm so sorry. I'm so sorry." I just lost it like a little girl. Amazing person that when it mattered most, when there was risk, he stepped up to the plate. Primary goal of Hurley Investments, plain and simple, is to never let you go through a loss like 2008, 2000. I could say 1987 crash, the 1983 crash, is never go through a loss like those years. Now, that involves some things. That involves to not end up in a crash like that. There are times that you are paying for insurance when it might not be necessary. That happens, right? There are times when we're paying for insurance through earnings events, through crossovers on the S&P 500, when there are times that markets go through head fakes. But there are times you're paying for insurance when you might not need it. There are times options are used in the play of stock ownership for speculative. But I can't spell what it means. Speculative. High profit, high risk trades, i.e. Facebook, Visa, Costco, Ford, directional, long calls. It should be delete long calls, where sometimes things fall down to such an extent that we do that. And it's funny because Visa's been very profitable. Costco was very profitable. Facebook was very profitable, but it fell back. Ford's not quite put on yet. But there's certain times that you're doing certain things. For years, you amass. Come on. Huge quantities of shares. 800, i.e. 1,000 of NVIDIA moves to 300. There's a lot of examples, i.e. for 1,000 moves to 2,300. So if that's 2,300, NVIDIA had to be 2,800. Sorry, need to look at my notes better. But the key here is that you're taking the risk or market risk out of portfolios. And someone just made the comment that my screen might be frozen. I'm probably delayed. I'm in a hotel in Denver. So in all honesty, I don't have the best internet connection. You can't please everyone all the time. And one of my most interesting understandings, our clients have no idea how to invest. Too short-term thinking and a lack of understanding of the caller trading process. And that's okay. Some people haven't gone through an education. Some people just won't ever get it, period. And it's okay. Those are the people that will pass off to other people. Those are the people that I guarantee you in the next couple of years when things fall, we'll watch their they'll watch their portfolio lose half their value again. That's what happens. But I'm not a fan of Kramer's, but I thought today maybe some understanding of the rules of Kramer's rules of engagement for investing would be really helpful to understand, because this is what we do at Hurley Investments. We follow the Warren Buffett strategy of, hey, we're going to put the time and the effort into understanding what's going on in the market. Whether it will continue or not is irrelevant. But we're going to go with the understanding that we want to at least figure out what's going on and why. That we want to spend the time doing a good job of being able to explain to our clientele what's happening and why. That we've done enough research on our side to make sure that we're doing everything we can to work for the money that you guys pay us, or that our clientele would pay us. Some of you aren't clientele. Part of that is in buying the best of the breed. We do research. To find good stocks that are at a cheap valuation that give us the ability to at least be able to tell you mathematically there's upside potential in the company. We do look for high quality companies that represent value. We watch the bond market, and I should put in here, and the dollar, because that moves the stock market today. When there's sudden executive resignations, that usually equals a sell signal, in which case we're looking to sell. We're realistic in our returns. Yes, we can get some huge exponential returns, but in all reality, we wanted to be in 6 different stocks that'll reach 9 different sectors of the S&P that give us the ability to just have one when it has 20 or 30% more shares added to it. They give us that 20% return in the stock market. A 60% return might be 2 or 3 that hit in 1 year. On, yes, a 6-figure, 200,000, $500,000, $1 million account can go through a 60% return. But you've got to give it the time in the year to build. We do the best we can to explain our stock picks. Beware of promotions. Anytime you see these little dollar stocks, these IPOs, those are not great stocks to be in. They're going up because of promotion, not because of fundamentals. Don't believe everything you hear. If you hear it, research it, prove it, find out what it is. Find out if what you want to believe in is mathematically possible, if it's probable, if it's done it in the past. There's a lot of research that can be done. Don't sell a winner to buy into a loser. Hence, that's why we add insurance on stock ownership. And bad fundamentals to a company doesn't mean it's an investment. Don't speculate. Yeah, there are occasionally a Tesla that takes off. I would still not want to be in a Tesla, because it would not fulfill my fiduciary responsibility of buying good, sound companies for my clientele. Are there any questions with what I'm trying to share with you guys today? Or are there any questions you'd like to add in regards to why I presented what I started off with today? I'm hoping this gets around to some people that aren't here today, because I'm actually probably saying it for their benefit and for their help. Of course, David. David just made a comment. Sometimes it's good to hear the investor side of the story so we can better appreciate what they go through. And David, I think I appreciate that. Obviously, I'm going to say you're 100% right. I'm also saying that because I want to. How does that sound? Bill, you've been with me for forever. And Bill has been with some other advisors. Something Bill tells me all the time is, hey, you keep making a little money here or there. I'm not sure if we really had any big runs up yet, but I've given Bill a sense of comfort that he doesn't have to go through some of the crap that he's seen with some of his other advisors. Boy, I wish I could. Part of me wants to share some of the positions he's been in the past, but that's not fair. That's not fair at all. Singles do well. Home runs aren't necessary. Bill, it's a great comment. Kiva's been here, and we found an advisor together, then as Kiva and I did our research, that was created a whole portfolio off of a penny stock newsletter. And the lady couldn't understand why she's not getting the returns that she needs. Not only that, Keeve and I found the penny stock newsletter and passed it off to her, and we're shocked that one, we could prove her is getting his stuff from, and two, that she still kept some of the money with him. We kind of scratch our head and wonder what the hell is wrong with people. Doesn't make sense. Where our markets end this week, it's usually higher or lower. I'm going to have to go with lower. I'm going to have to go with lower because technically speaking, we are approaching our oversold area on our RSI. Also, it's the end of the month. So even though we are technically bullish right now, I would expect to see a sell-off towards the end of the year. Another comment was just made, and let me answer this one. I do try to offer a more profitable fixed income with risk as near to fixed income by spending on more attractive management of portfolio. Do you see it that way? So, no. In all honesty, in my opinion, it is impossible to do a fixed income type strategy because the risk is always going to be 2% or more. You went far out in time to pay for a long call, or excuse me, a long put with a 6 to 9 month at the money, slightly out of the money, short call. You still run above that 2% risk, but there is more risk than that in bonds. In fact, the risk in bonds really is every penny as well. So I'll have to talk to you later on that one. That one I'm not sure. Maybe I don't understand what you mean. So I'll talk to you later on that one. Lower, but the Dow is bullish. The S&P 500 is also bullish, but that has touched the overbought line on the RSI. And even if we go to the NASDAQ, same exact thing. So I think there'll be a reason to go ahead and take some profits. And with that said, that is why I was going to run into how am I looking to trade? Still protective puts or collar trades after earnings. And if I can pull in here, I'm going to pull in here Baidu, but it's really more than just Baidu. I'm going to show you a little bit where I'm all over the board on Baidu. Here's a lot of Baidu. I've got some shares that are protected with long puts, and some have even an extra contract. I've got some with long puts at 215. I've got bear puts at 250, 220. I've got bear puts at 250, 225. So we are all over the board here. But the short answer is I've got some long put positions on Disney at 115 that I'm going to keep in place. I've got some positions on Baidu that, because I've got some September 215 puts, I can roll shorts, especially these ones, that I can roll them farther out in time for a profit and be able to lock in the $250 long put profit. I've got some positions that we put out to August 31st for protection that I felt comfortable with to make us money, because I didn't understand when the tariffs were going to get done and what they were going to go through. So, as hard as it was in the last couple of days to sit through some upward movement, my long put protection was on for earnings. It was on for protecting me into the end of the month. And I'm just going to keep taking profits off of bits and pieces from Baidu. And the neat thing is, if you work some of the numbers or work all the numbers out, you've got 120,000 there to offset 111,000 there. So it's working out, even though right now it doesn't look pretty. As we take a quick peek, if you ask me where we're going to end August, I'm obviously going to have to say something really close to where we are right now, but we'll probably be down 1% for August when it's all said and done. Earnings, this is the last week of retail. Tiffany, Best Buy, BJ's there, American Outfitter Brands, Dick's Sporting Goods, Guess Jeans, and CRM Salesforce on Wednesday. Abercrombie & Fitch, Burlington, Dollar General, Dollar Tree, Kirkland's, Shield is Sears, right? American Outdoor Brands Corporation, the old Smith & Wesson, Lululemon, Big Lots on Friday. Most important day is GDP tomorrow. After that, personal spending, personal income. But we should see that in the GDP if consumers are still buying. Nothing internationally has stood out for me that I felt I needed to tell you about. And for the most part, I've just got a couple interesting how Trump might get a slow down rate hikes. I have Baidu, Google's fears, gift, and I have one on Ford. Little information on Ford that may help you if Ford's a good company, even though it's a single-digit stock. What questions can I answer for you guys? Go ahead and type in your questions. What questions can I answer for you guys in regards to what's going on this week and why? Someone asked me about fixed income. With the rising interest rates, there's a good chance that your fixed income, And then an advisor will tell you, hey, if we churn you out of your current fixed income and do it for a loss, we could get 3 times the interest. That's about where we are right now from about 2-3 years ago. So you bought in for a bit of a loss 2-3 years ago for the commissions, probably 7%. Your bonds are probably down in that 3% range because you bought a premium is now selling at a discount, and you're not making a whole lot of interest, but you can get churned into interest that's 3 times the amount. It's great for your advisor to make a load of money doing that, but it is not a smart investment right now. It is not in bonds after a 30-year bull run to churn out into something that's higher. Right now, I would definitely not do it. I think there's a risk to bond values. Now, obviously, if you hold on to your par value back, but that doesn't always happen as well as we saw counties and cities even go bankrupt with their muni bonds. So I would not be in bonds right now. Not a good place to hide for the next possible recession that's coming, or the correction in our market of 20% or more that hasn't happened, a little bit like 5 years overdue. What other questions can I answer for you? All right, then. Hey, if there aren't any other questions, thank you for letting me share an advisor side of what's going on. Bill, I appreciate your comments. Thank you. Bill's been with me for forever. I need to get Stuart in here. Stuart, Bill, Mike Saltz, some good individuals that have been with me from the very start. But guys, hey, I appreciate you being here tonight. I will get this off to Dave Westlake to get posted here in the near future. Guys, have a wonderful evening, and I should be back home sometime tomorrow night for the first time in forever. But hopefully this is interesting to give you a different way to look at the stock market, to look at how an investor would look at your money. And guys, I appreciate your business. I appreciate being with me tonight. Look forward to talking to you next week. Good night, everyone.